Alright guys, welcome to the stream. Taking a look here at TradingView. Going to be looking for some option opportunities in equities today during this live stream, and potentially put on some trades that we've looked at over the past couple days. So we're going to continue going down a watch list that we've been looking at, and find some opportunities for going forward. So right now we're looking at PZZA, Papa John's. And this is a daily chart. We're going to be scanning on daily, weekly, and monthlies, looking for option plays, whether that's selling premium or taking directional bets. All right, let's see here. All right, here we go. Let's look at Papa John's. Recently, back in July, we had a gap down, and that took the stock down. That was probably on some sort of news. There's been some controversy around Papa John's with what's his name? The founder who's trying to buy it back. Those claims and those allegations or whatever. Just the news. And that's taking the stock down. You can see, let's go to the monthly real quick. 2016, we put in highs, all-time highs, up above 88, and then reversed. I've been reversing ever since for the past 2 years, really. We came down into these lows here at 40 bucks and put in a reversal with a hammer candle on the monthly, and that's why we've had this strong move back up. But right now, we can see we're hitting these wicks, which potentially could be the breakdown point for a move further down. We've been in a downtrend, making lower lows, lower highs, lower lows, lower highs. We put in this lowest low here. Somewhere in here, potentially, we could have between 50 bucks where we're at up to 57, a lower high, and then put in a lower low. But this is a pretty bullish sign right here. And looking at this downtrend that we have been in for the past 2 years, you typically don't want to short after a down move unless, the only caveat being, unless we look to the left and there's room to go in terms of movement to the downside, if there's some more profit margin. And there definitely is, but it's just a matter of, is this monthly? And this is a monthly, and the higher the time frame you go, it's going to be a stronger the level type of effect. And so have we seen at least this downtrend come to an end for now based on this bullish activity? That's the question. There's really no break of a trend line yet or anything like that. This is really, and then let's go lower. We are in this weekly area where prices broke down, sat sideways, tried to rally up, they couldn't, and then broke down further, taking out these lows, coming right back into this origin of this move, this strong move up. The market likes to put in, or attempts, a few attempts in either direction before changing trend on the bigger macro picture. And so, you could definitely see this as a point where price will stay under this trend line and then retest and make a lower low, possibly taking out this. It would take this out and come right into this area of a breakout right at 30. It looks like 35.82 right in here. You had price rally up out of here, have its pullback. Couldn't even get back into this area where it broke out of, and rallied up further to make highs, indicating that there's potentially a good opportunity underneath these levels. So in the very short term, based on this weekly, you'd want to be selling up here. Profit targets, the base of this big candle, about 45 bucks. Second one would be in this wick down here at the $40 mark for a potential reversal down at 36 to get long. So you can either sell some calls up here to take advantage of that or buy some puts outright. Show you on the daily. Filled this gap between 52 and 50. This gap was filled with another gap above it. Lots of trading going on in this area, these price ranges. So what are we on? We're on the daily right here. Big bearish candle. Once we got a gap fill, nothing really in terms of support or demand until you get back under this 46 level. Really based on this wick, this hammer down here, 44. See how we trade the rest of the day. If we get a close below yesterday's close, that may confirm the bearish move down, at least get a pullback, a few bucks. So we'll keep an eye on that. Potentially look at buying some at the money puts. You'd buy the 50s going out a couple weeks. They have earnings November 1st. That's a potential opportunity. Let's take some notes on that. All right. Let me know when you're ready. All right. Red hats. Off the looks of it, gap down, consolidation, further move down, took out this recent low, right into this area of a strong move up. Where's this at? This is $1.30. $4 range right in here. So you put in this stock, put in this base up in here between the 120 area to this 135. Couple attempts to make new highs, pullbacks, make new highs, and finally it broke out and rallied up nicely up out of this area. This is right around 130. This is on the daily. Let's look at the weekly. Yeah, you got the strong move up out of this area right here. It's 127. So this is what we like to see, a strong move down, an attempt to rally, and then another move lower to take out this low right into this basing action right in here. This is a potential trade. When do they have earnings? December 17th. Oh, they just had them in September, end of September. Tech software, seasonality on these, on this particular stock, since it is tech and it is going into the last three months of the quarter. That's typically when we see tech have one of its stronger moves to the upside. You'd want to align these tech plays with potentially the broader markets. We're consolidating up here on the Qs, up at these all-time highs. looking like we want to break up further. You'd want to see the market moving up as you're trying to get long. A potential play in that space. So 2 impulse move down right into this area of the breakout to the upside. We get a close above yesterday's close. That would indicate some buyers coming in, potentially taking this thing back up for a gap fill up to 140. It's a $10 move. We'd know we're wrong. We do have this big old wick in here. So that is telling me that some strong buying pressure came in out of this zone down here too, out of this 120. So there's 2 ways to play this using options, and that's what we're looking at today. We're not, I mean, you can buy the stock outright, and that's fine. But for using options, you can go ahead and take a directional bet, buying some at the monies, in the monies, having a high delta to take advantage of the move up, or you find the level that you're comfortable owning the stock at and basically sell some premium under that level, so you don't have to necessarily worry about the direction of the trade. If you're bullish on the stock and in the space, the sector, the industry, and there's a price you would like to own the stock at, selling premium is a way to do that without having to actually own the stock itself. And then you can get a little fancy and you can combine selling some premium to finance calls in this case. Keep an eye on this one. What you can do, we're at 130.80 on this. Depending on where we close, we could look at the options chain and look at buying some in the monies, the 130s, a couple weeks out, potentially a month out for a retest and close of this gap up here at 140. Ultimately up to 165. They're 390 for the at the monies. How far out? November 2nd. Okay, so a month out. What about the 110 puts? What are those at? What's the implied vol? 0. Mm, okay. 3 delta. Yeah, too low. Too low. All right. Well, let's see if we get a close and stay above yesterday's close, and then we can take a look at putting on that for a long. Okay, cool. What do we got next? Ross stores. Weekly. All right. Taking a look at the monthly, this thing has had a nice run, really the past 4 years. It's indicative of the market overall. So um, these discount retailers, some of them, have just really popped up. Taking a look at it right off the bat on the daily, what pops out to me is this $90 level, about $6 away, but this was the origin of the move of this breakout once we took this high out above 85, consolidated at that high, and then moved up. Hasn't been tested, meaning price hasn't revisited this area since leaving it. You have a nice strong move up, followed by a slight pullback. Buyers coming in and support price, take it for the breakout, and brought it all the way back up. So right off the bat, this $90 level looks pretty interesting in Ross. We did put in two nice bearish candles. We didn't make new highs on those. We have this reversal candle almost. The thing with all-time highs is you need to wait for the selling pressure to come in to really load up to the downside. Otherwise, it's just you want to wait for small pullbacks to join the trend up. And so in this situation, I like this 90 level as a possibility to get long or sell some puts underneath. Weekly, and we'd want to check at the end of the week, kind of where this thing is at. If we're going to close below this candle, what's happening is, let me zoom in, you have last week putting in the all-time high, reversing, closing lower, and then this week attempting to take out the all-time high. Couldn't do it, failed, getting rejected, price getting rejected, and then closing below last week's low candle. And if we can stay below last week's low and open and close below that, there is some room to the downside. Here's that high with that base back at this $86 to $88 range. And $90 daily level we were looking at is in this move right here. In the very least, a retest of the 92.30 area. You have this almost doji in between these two strong impulse candles. So this is something that we'd want to come back at the end of the week. Towards the end of the week, it's Wednesday. Probably check back tomorrow and Friday and see where we're at. Just because we're at all-time highs and it looks a little bearish, we don't want to just put on a short right away. There's no reference point to look back on to see where some sellers came in. So we got to wait for that picture to form before we get on board with the short. Really the $65 level. This is on the monthly. Monthlies levels are nice, but all right, we'll keep note of that and take a look at it at the end of the week. There's something. Oh, no, YouTube's good. Okay. SABE. Oh, VE. Spirit Airlines. Got it. I like our Southwest airline play. Yeah. Yeah, no, you're good. Let's see. On the weekly, took out this swing high. Still below this double top, this topping pattern right here. Seeing a pullback. Back at 40 would be a better spot to potentially get long in. 42 to 40 down in here. But like I said, I like the Southwest play much better, so we can take a look at that in a little bit once we get through doing these. Yep. earnings at the end of the month. Getting back up into this big trading range that we had been in for basically 2 years, it looks like. Oct 15 for the past couple of years. This range between 54 and 64. We fell out of that earlier this year, beginning of summer, and have rallied all the way back up into it. So in terms of any real selling pressure, it wouldn't be up until this above 63, 62 area up in here. So if we're going to hold this uptrend, seeing a little pullback back into this 55 area, 55, yeah, 55 even, right at the trend line. Potential opportunity, we had taken this big candle out, put in a reversal, now pulling back. Be interesting to see where we close this week. This week we couldn't even get above the opening of last week's candle, and this is on a weekly, so there's definitely some selling pressure that came in. Now, are we just having a normal retracement back to this trend line and then going to rally back up? Or have we exhausted the move to the upside with a potential break of this trend line for a move lower? That's really going to be the indicator, is if we hold this trend line at 55 and bounce, then we could potentially get back up to the $60 area. If you see a break of this trend line, look for prices to retest the lows back at 49. That's what I'm seeing right now. Top of this gap down is right here at that 55 area that we were talking about. The bottom of this wick, which is a doji after a strong move up, a pause, and then another strong move up. We're basically retesting that area where we broke out of. In terms of the conviction level, it's not the greatest. We're not seeing buying pressure coming in and giving us that signal that we want to see. A nice strong hammer candle yesterday would have been nice. We're moving up, but we are sure taking our time, so it wouldn't be out of the realm of possibilities to come back and test this area. So if we can get a break below 52 quarter, let's call it, we'll see if we can stay above this trend line at 55. If we stay above the trend line, then we'll get long, look at buying some in the monies, or at the monies, for a continuation of this uptrend. Okay, cool. What's next? Say it again. S-Fix. Oh, Stitch. Got it. They just had earnings, didn't they? Clothing. What is this? A clothing subscription company? Yeah, gap down on earnings. Look for a retest up to the gap down at 38. So, or excuse me, 34.86. We'll put an alert at 34. With Amazon Prime and their Prime wardrobe, you gotta bet stores like Nordstrom, which already has Trunk Club. It was a $50 stock. Yeah, it's just hard to believe. Is this Is this going to be, destined to be a blue apron kind of thing? I can't. Exactly. So just right off the bat, we came down into this base right here, below this high, below this pivot low, right into this strong explosive move up. We're getting some buying pressure coming in here. Let's see how we close today. If we close above yesterday's close, you may see a reversal back up to this 35 area. And if that's the case, we would get out and then reverse, take a short, because there's some better levels down below. And just the overall idea of a subscription clothing company standing on its own. I don't know much about it, but right. Yep. Big move down. Right back into this 25 area. This is on the weekly, monthly. Yeah, back down here in this 20, $18. Bouncing up out of this right here. Big strong move out. Pause. Attempted to rally, couldn't. Finally did. Reversed. And now we're retesting that area where we're breaking out. That's on the macro. That's the monthly. Like I said, let's see how this thing closes today and where we trade today. It's only 9:30 Pacific. We still have 3.5 hours. So a lot can happen in that time. Let's keep an eye on that, but that's the plan. If this thing reverses higher, closes higher than yesterday's close, look to get bullish for a move back up to this origin of the gap and drop up here at 34.80. And at that point, we'd get out of the longs and reverse for a short for a further move down back into this basing area down here towards the $20 level. Look at SPX real quick. SPX took out Monday's high. Attempted to take out the 21st all-time high. Up here, what was the high? 29.40.91. On it, and we reversed. Okay. It, yeah, it's basically basing up here, which is telling me if we can hold these candle bodies, stay above these wicks. We're not getting any closes above 29.37 though. We haven't had any closes above that level, even going back to that all-time high. You'd want to get long above 29.37, call it 60. Other than that, stay away from it until it gets back down to the gap fill at 29.20. Because it may want to fill the gap before it does break out. But if it can stay above this area and we can get a close above the 29.37.79, 29.37.60, then that'll tell me that we want to get these highs taken out. I believe the Dow made new highs today, didn't it? Yeah. You have a strong move up, higher low, higher high, basing, possible move up higher. Okay. What's next? Oh, you're good. Never even heard of this. This thing goes back to 89. What the hell? What's the volume on this thing? Yeah, that's not great. Mm-hmm. About a million shares then. Yeah, it's not liquid enough for me. I'd like it to be over daily average volume over a million shares. Sketchers. Yeah, it really is. This is just technically a huge range that we're sitting in. Definitely towards the bottom end of it. You got this huge candle right here from 23.86 up to 33. Basically just a bunch of indecision down in here. Lots of trading right in here at this $25 area. Gap has been filled down below at 22.38, it looks like, barely. I wouldn't be surprised if this thing kept falling closer to that $20 level. A retest of this swing low right here between these two peaks. Potentially could be forming right here is a nice big red candle to the downside out of this basing to confirm the move down. This is on a monthly. Let's take a look at the weekly. Take a look at something real quick. Ah, dang it. Yeah, I know. This thing just looks yuck. The ATR of 87 cents. Now let's move on. Nothing I'd want to do on this. Caught in this range. All right. Square. Square's looking a little toppy up here. Put in this candle with an all-time high, pulled back, closed lower than the day prior to that, followed that day up with an inside day, basically selling pressure coming in and taking that down. Not a bullish candle. And then today you see that we're having another down move. We'd want to make this decision based on where we close today. If we close below yesterday and Monday, to me that's confirming that we could see a possible pullback, at least to the origin of the gap, which is down at this 88 area. So that's a 10-point move. Let's keep an eye on square. If we close below 97.25, we can get short. Did you get that, Tori? Cool. Tap, tap. Okay. Oh, before we move on, yeah, just in terms of getting long this, yeah, we need to see a pullback before we go long. Ideally, the 77.5 area isn't too bad. Got a nice pop up from there. Attempted to retest it, couldn't get into it. Even the $72 area. Look on the weekly. Yeah, closer to the 72, under 75, right in here. You'll notice these two candles right here. So this was a high, or this was a high. We closed lower, hit this strong move up. Buyers came in. Then we started to see successive higher closes. Took out the highs, these highs. Closed higher than this candle. And opened up this day, which was August 20th, or this week, excuse me, and then rallied up and continued to push up. And so this was almost the origin of the move right in here, somewhere in here. This candle broke this candle's high, which was at 75.47. So potentially between 75.50 down to the 70.50 area, this $5 area, would be a potential long opportunity. We do have some room to the downside if we do see that bearish confirmation today. We can get back down to this 88 area. Okay. I'm sorry, what was the next one? TAP. Yes, it is. This giant hill, yeah. Just right off the bat. Come here. We are definitely and have been in a downtrend on the weekly. Coming right back into this area of the breakout. We rallied up out of there. Big old down candle. Tested it a couple times, retesting this. I'd like to see a break of 58.80, this low, 58.75, and then look to get long. We're just making lower highs, lower lows, lower highs, lower lows. We're right here. This candle came all the way down into here. Take a look at the monthly. Retested these highs right in here. Set back before 2008, 2007. You got a hammer candle right in there with a strong move up. Attempted to retest. Pointing down into this area. What is that? A long at 58.80. Yeah, right in there. Yeah, let's see a break of 58. 68.80, yeah. Another way to get into this for a long opportunity is wait until it breaks this downtrend line, and then on a bullish uh, daily candle, then you can get in. If you don't mind owning the stock down here, we could take a look at puts. Can't talk right now. That's selling some premium, but I would rather wait until it got down into that area before we started selling some puts. This point right here where we're at could be the breakdown point. We could have a down candle this month. Okay, next. TGF. Invalid symbol. Target. Right off the bat, looking at the monthly, last month we put in a high, an all-time high, and closed in almost this bearish candle, reversal candle. This month so far, couldn't take out that high, and as of right now, we're below last month's. We're right at last month's low. The low was 86.38. We're at 86.49. So we're right above it. We're flirting with that. The thinking is, if we close below this candle and this low, we have plenty of room to the downside. In the very least, back to this candle down in here at 80 bucks. These monthly patterns, when they put in potential reversals in either direction, it could be a powerful move. So ideally, first target would be back down here in the 75. Second target back down here in the lows towards the 60 area. Got this strong move up out of here. Want to get out before that. But that's on the monthly. That's a really long time frame. On the weekly, we are closing lower than the past couple weeks that we have. Well, not closing, but we are trading lower than the past couple of weeks. Closing below this low of 86.20, 86.21 would confirm a possible down move. When do they have earnings? They have earnings in August. Okay. Potential short opportunity with Target. We had a gap up on the daily based on earnings. We're retesting that area right now. That's what we've come into. Let's see how we close today on this. We close lower than yesterday. And you guys are going to hear the same thing over and over. But this is part of our process, part of our rules. We need to see the confirmation on the downside, especially before we take short positions, just because the market is so bullish. And so we want that extra confirmation before we get short. But a gap fill close would be back at this 83 area, 83 quarter. So let's see how we trade the rest of the day on target. If we close lower than 86.42, there's room to the downside, at least $3. So we could look at buying some puts in that case. We don't like to sell calls again in this environment. We'd rather define our risk and take our stops than deal with having to roll call options all the way up, because markets are designed to go up over time, so we don't want to get caught in that. we're just taking advantage of short-term downward moves when we can. What's next? TJ Maxx, another retailer. Looking like Bitcoin. This, just like Ross Stores, has enjoyed a nice move up. There's not much I'd want to do on this thing at the moment, it doesn't look like. Let me see. Potentially have a trend line break below this level here. You have two waves up, put in the highs, now you got some bearish action going on. Either going to hold this and continue and make another wave up, another impulse move up, or if this breaks, then we could potentially head back down and have a gap fill back at this 102 area. So this trend line break would have to be below 109. I'd say just put the alert at 109. If you're bullish on this, I mean, having this close with a bullish formation after a down move back into an area of really basing in support, this thing can potentially hold this and move up and head back towards the 113 area. It's only a couple bucks away. Just gapped up on earnings. Prior quarter gapped up on earnings. Prior quarter gapped up on earnings. Earnings are supporting the growth in the stock. They're going to report when now? November. All right, we're good. Tesla, good old Tesla, huh? Oopsies. Not what I wanted to do. Thing is all over the place. Realistically, we're just stuck in this range that we've been in. Tesla traded in this huge range of about 180 up to 280 for about 2 years before finally breaking out. And now we've been in this trading range, June 17 to now. So a little over a year, we've been in another trading range, basically staying above this range in here. We've had a couple attempts at breaking through that, but held here at this, looks like 250 area, 250 to 240, yeah. And on the monthly, strong move up, pause, and then a further move up to take out the highs. On its way up to 380, came back, retested it Attempted to rally again, and you had the news take it up there. Retested the lows again. Just based on the trading range itself, what you would want to do is if you're going to sell options, you'd sell them below the range. You'd sell them below 240 and sell them above 390 is a way to play the stock. Because right now it's just in the middle of this range. Attempting to hold 300. It's actually lower than 300 right now. Lots of room to the upside in terms of profit potential. Yes, this is selling pressure on the monthly with this big old wick coming in, but it's basically cleared it all out since we've tested this area up here at 380, 386, the all-time highs multiple times. If you get enough buyers to come in, especially if Tesla actually turns a profit in this third and fourth quarter like Musk said, then you're going to see this stock probably rally up to 400. With that being said, we need to go down to a smaller time frame to see where we could potentially get in. Held this base right in here multiple times. Now we have this down move with another move after a pause that we're hitting into right now for the past couple weeks. This week we took out last week's high, but are still within this formation around 320. So immediately there's not really an opportunity at the moment. Yesterday's trading, we put in a high, a recent high, up to 316, and then reversed and closed lower than Monday's trading, and now we're closing again lower. To me, that's bearish on the daily, on the weekly. Yeah, I mean, just because there's so much trading down here, you know, a move back to 260 would not be out of the realm of possibilities. Taking a short, basically at 300 for a move back towards 250. 270 in the very least. This was a gap down, pivoted off of this pivot, off of this doji, and then rallied back up. So yeah, I mean, we're just trading again in a range. If the range is going to hold, then we're going to trade lower back towards this 250 area. IV and Tesla's high. What are we looking at? Tori? Let me take a look. He's doing Tesla, yeah, high IVs. High implied volatility, high realized volatility as well. This thing is moving. ATR on this stock is above $16. This thing is definitely moving. So let me take a look here. Probably wouldn't need more than a couple days, or a couple weeks, excuse me, to take advantage of this drop down here. So you'd want to look at the, you could look at the monthlies. The IV plus minus is 38. If you bought the in the monies, so 54 delta, $16. Expected move of 30. So your break even would be 285. 285 is above the gap fill. Well within that range. Yeah, I like the short idea based on what's happening out of this area. This isn't a real strong demand picture, if you will, especially with these couple gaps. So a retest and a fill of these and actually taking both of these out into this lower pivot right into here, 250, 245. Definitely a possibility and would be the targets. You could do a spread. You could do it's a $50 spread. You're just trying to, yeah, it's not worth reducing the cost by a couple bucks to cap your gains. Another option would be to, you don't want to do that technically. We don't like to sell calls, like I said. But you could look at what a standard deviation move is and this is just for 2 weeks, the 330s. 330s would be above this gap fill that we couldn't hold. But we've already been up here once. You'd want to be probably higher. You'd want to be above 350. Oops. I don't know if there's much of a bid there. Yeah, 70 cents. This thing is too volatile to sell naked calls on. I'm not really feeling that idea. Equity traders out there, you can just short the stock. Yeah, IV's so dang high. Did they report? November or something? Nothing to do really on this at the moment. Yeah, I'm gonna pull up the next one and then I gotta run to the restroom real quick. Good old Twitter, huh? Tweet, tweet, tweet. Back into this $28 area. Origin of this big old move up to 48. Slowly stair-stepping our way down. This is on the weekly. This would be the first week that we're closing higher than the previous week. If that's the case, then that would be the case to get long with the target of 34 and then 40, about 43. However, the flip side is if we get back up to this $30 area, this could potentially be the flip zone or the breakdown point for a move lower back towards this 26, 24 area based on the fact that we had come up from here, we rallied up from here, pulled back, not quite all the way into the zone, but close enough, rallied up, failed, moved through it, and now are at really the bottom of it. And so if this is going to hold, like I said, you'd want to see this bullish confirmation and then move up higher. What also could happen is this could be the pause for the cause to the downside. So you can see some trading back and forth into this area but this down move is just too much, and this pattern is going to hold and continue to move lower. And so this $30 area, round number, is somewhat of a pivotal spot for this based on where we're at. So this is on the weekly. Let me go back to the daily. And the daily, you can see we're still in a downtrend, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Not breaking out really yet. Potentially could be doing it right now, today. We'd have to see it above 29 and close above 29. There's a little gap in here that it retested and fell from. We're basically in this candle right here. Right? Yep. Which came in and filled the gap. Okay. This is a wait and see, but if we're bullish and we get the confirmation that this thing is going to move up, first target will be up here at 33. Second target up here at 35. Third target up here at 30, we'll call it 37, the origin of the gap. So with the stock only being $29, you could buy the stock outright, especially if you have the margin for it. Or the options are going to be really nicely priced. So what are we looking at for the at the monies? Let's call it. Do they have the Decembers yet? They have the Decembers? 280. Okay. And that's the $29. 29 strikes. Yeah, we need another bullish candle above this break, above this trend line to get in. So that's the plan. 29 quarter, really. So if you want to set the alert for that. But yeah, I like that for a long. If this does not hold, or we don't get the confirmation for the long, then this would be the potential breakdown point between 29 and 30. One really for a move lower into this 25 area. Back to retest this big old base down in here. You can kind of see what's happening is very similar to how the stock traded the last time it had a big impulsive move up and then followed by a big drop, traded sideways, and then finally continued the breakdown. Is that what's happening here as well? This is kind of the analog for what's happening now. So if that's the case, you know, a measured move would be down to the lows again, would be back towards the $16 area. Or has Twitter put in a base finally, a long-term base, and it's going to start making its way back up towards these highs? So you got this. Let's highlight that so you guys can see that. Is this what's happening? Or are we going to change direction? And you see with this, you kind of got that breakout, but it was a false breakout. Back up to the origin of the breakdown. So that would be right in here 30.50 up to 31.50. So even with a break of this trend line, we have to be cautious of this area because this could be the continuation move down rather than the bullish turnaround move. So if we did get long in here, you'd want to look for possibly taking off some profits between 30 and a half up to 31.50. So for risk to reward, it may not be ideal if we're waiting for a break above this 29.50 area to only be $1, $1.50 away from a potential profit target, and the only profit target may not be worth it. So we might skip it. It just depends on what the market wants to do and what it looks like at the time. So again, we have this reference point, so we're gonna wait and see what the market tells us. Next, United. Just off the weekly areas that's standing out is this $80 mark right in here, which is the retest of the breakout of this high. Looking a little bearish. You're having some bullish pressure come in on each of these down days, lifting the market, but the market isn't getting higher than each previous week. This is a weekly, excuse me. The same logic applies. We're not getting higher than the previous week, and we're closing lower than each week. Which is showing a little weakness. But the move is pretty orderly. It's not having one of these big weekly down moves. So if we can get a pullback into this 82 area, 82.50 to 80, that's a potential long for us on UAL, United. Other than that, it would be lower at this 72 area, and then below that it would be below this big old basing pattern, and that would be back at the 55 area, 56. But first up here is 80, 82.50, 72, and then down to the 56 area. Let me look on the daily real quick. Yeah, we're just in this range up here between 86 and 90 at the moment. We're going to break down from this range. We'd want to see this thing stay below this red bearish candle right here, this engulfing candle, which just stretches from 87.60 up to 89.50, so it's a $2 candle. We've barely gotten into it today. What did we get up to? 87.90. 87.50, so about 40 cents into it. We do have a hammer candle. Typical action that's range bound, but we're either testing the low end of this small range and then going to come back up and test the highs, or if this thing is going to break, this would be a potential breakdown area between where we're at here, 87.80, up to the 88.80 area, with a further move down to where we were looking at initially, 82. But at the moment, nothing really to do. This 72 area looks real nice below this big old gap. That was based on earnings. Price tends to revert and get back to the origin of the gap before closing the gap, and we haven't even done that. We haven't closed the gap or gotten back to this origin, so that could be the potential path that we're seeing for this. You can use crude as a confluence as well. Higher oil prices, typically you'll see some weakness in the airlines. That's been historically. There's obviously been times and years when it's disconnected, but that's the case for anything. So. Okay. What is it? Okay. long back at the 112 area, 113, with the short if we got back up to this 128.50. Other than that, we're just in the middle of nowhere. So there's the high end of the range. Here's the low end of the range. Here's the middle of the range. Oopsie. And that's basically what we're stuck in right now. So when we're in the middle, we usually do nothing. So we want to wait until we're a little lower on the curve or a little higher up in price. That's on the daily. Let me look on the weekly. Why is it doing that now? That's weird. Hold on a second. Okay. Monthly. Just caught right in the middle. Previous month was definitely bearish. You can see we had two green candles up into a reversal candle on the monthly, which was actually the all-time high, and then it closed lower and moved down, and now we're retesting that area. Came up in there, put in this high, taking out this high, but well within this candle base, and then we closed lower this past month in September. But we have this big strong move up, so we're like I said, we're just stuck in a range right now. Not much to do. You could definitely retest this lower area down at this 112 area, this hammer candle on the weekly with a nice strong move up. We're breaking down at this point. If we're going to hold the breakdown, it could be right in within this candle right in here from 118 to 120 before moving down lower. But nothing great. I'd wait for us to get up to this higher quadrant up here above 130 before we looked at shorting it, or getting long would be down below, in the very least at this 112. Other than that, much lower. So yeah, nothing much. Let me run to the restroom real quick. I'm gonna load up the next symbol. Urban Outfitters. It's actually looking like a long opportunity already. You have this consolidation at highs with a breakout and a retest and a move higher, and we're retesting the lower end of this particular zone, which also happens to be this swing high retest back in 2016. This is on the daily. We get a close above yesterday's. That would look bullish. That would be bullish. We're holding yesterday's lows. If we can close above yesterday's trading after stair stepping into this zone, this is a nice long opportunity. First target would be back up to this 43 area. Second target would be back up towards this 47. This thing have options? It has weeklies. Okay. Whoa, what about December's? What are the December's looking like? 340 for at the money calls for December. IV's probably a little higher, isn't it? 42% on the IV. Very interesting. Be precise. I know. OCD. What's the name of this pattern? A megaphone or whatever the hell it is? It definitely has some room to the downside, that is for sure. Honest, I like this as a short. We traded towards the top end of the range. Couldn't break it. $3.10. Monthly. I don't want to see the seasonality on this thing. Hmm. All right. So in terms of urban, we're hitting this basically a retest of this high right in here out of this breakout, this bullish candle right here, this hammer. We put in a low and then we put in another low. I'd want to see this thing close above last week's close, which was 40.90. We're at 40.53 as a confirmation that this is going to hold in here based on this hammer candle. And then if that's the case, then we're going to probably come up and retest this 44 area into this wick and then back up into this tweezer top double wick area up in here would be 46.50, and then a higher move up towards this trend line up here. But based on this pattern, this is typically a, I don't want to say typically, but a lot of the times it will lend itself to be a reversal pattern to the downside. So, but you need to see a break above the line first before it does it. But in any event, we are in an area for an opportunity for a long possibly, so let's just keep an eye on that. Like I said, a close above 40.90, call it 41, and this would be a long opportunity. Monthly, however, this thing looks like it can drop pretty far. Pretty far. First target would be back towards this 36, 35 area based on where we're at here. And then an initial, or a secondary target down here at this 24.50 with ultimately a retest of the lows at 18. Those are your profit potentials on a short up here. This thing comes in with a reversal towards the top end of this range, and that's what it's done. When you get that reversal candle that we have the prior month, so for September, excuse me, you know, we don't get very high back into this candle before reversing even lower, so we are in a pivotal spot, to say the least. So let's just keep an eye on that. And potential long opportunity, potential short opportunity as well. So let's go back to love. This is what we wanted to do, right? Love, just based on the formation, guys, we got a head and shoulders, triple top, whatever you want to call it. Prices don't like to stay up here above the 63, 64 area. We're up here for a retest of this high, and we do have some room to the downside, so we were looking at this for a potential shorting opportunity. We are 62.5 puts. We may need to wait either towards the end of the day or going into tomorrow. If we close above yesterday's high, good chance that we're going to get back up to the 63 area. So that's another $1.50 worth of risks that we don't need to take. So yeah, unfortunately, I wanted to put this trade on, but it looks like we're going to have to wait. If we had gotten some bearish action today, retesting yesterday's lows, that would be a different situation, and that would be more of confirmation of putting this on. We're looking to get short. This is basically what we're trying to do. Based on the pattern alone, head and shoulders. Retest of this 52 area would be a target. First target would be about 57, 58. Second target would be 52. Staying on top of this base area here. But we're on the high end of the range. High end of the range. Look for short opportunities. Let's wait until tomorrow. It looks like we're going to have to, or the end of the day today, to see where we're at. We're either going to close above yesterday's high, and if we do, there's a good chance that we're going to move up. There's a clear shot back up here, up to this 6260 area, into these wicks. So if we can get prices a little bit higher and then put on the short, that would be the opportunity that we're looking for. Sound good? Cool. Okay. Sounds good. All right, guys. Hope you found this helpful. We went through a bunch of opportunities today, a bunch of stocks. Really just using this live stream opportunity to show people what we do and why we do it and how we do it in the equity option markets. We didn't do any futures streaming today. We may do that later this week, but we've basically given you a preview of our trading room and the opportunities that we look for using options. And so, like I said, hope you found it helpful. If you have any questions, feel free to contact us anytime. Contact info is in the links below, both on Twitch and YouTube. And look for some more live streams later this week. You can also check us out at simplyderivative.com, subscribe to our YouTube page, follow us on Twitch and the other social media platforms. And we will see you next time, guys. Have a good rest of the trading day, and good luck.